Very good afternoon to my dearest students. Good afternoon to Swaricha ma'am. Dr. Swaricha, good afternoon. Today we are here for the workshop specifically with very esteemed guest. Today our guest belongs to that category which is specifically very esteemed, respectful and honored. I'm very delighted to introduce to welcome our guest Munish sir. Sir is having an experience of more than 25 years. Sir is a chartered accountant and sir is involved in various committee, ICAI, CII, MCA. Sir has trained various central government officials specifically related to serious fraud investigators, registrars of company, other senior officers on fraud detection technique. Sir has trained more than 40 batches of government officials. Sir has also presented specifically in a conclave of the CAG, and this was a paper on a fraud at the CAG office. Sir is also involved actively in the forensic audit of various companies. Sir has worked as observer in a Irani committee on the company law. Sir is closely working with the ICI formulation of guided notes. We are very well aware the convergence has been happened, and sir is also publicized on the behalf of ICI. The list is so long. I'm taking the name of the few. These are the guided notes on the auditor's report, specifically for the prospectus, where the stake of investors, stakeholder is involved. Sir has also publicized a technical guide for audit of automotive companies, accounting of telecommunication companies, code of ethics, and guided note on build, operate, and transfer contracts. Sir is also a member of Ethical Standard Board of ICI for 2012 and 13. Sir has also worked as a member of Accounting Standard Committee in 2005. Sir has trained more than 3,000 peer reviewers across the country. Sir has also worked as a member of study group of CII for 3 consecutive years in ICI, and sir is also a reviewer of balance sheet for the research committee of the ICI. Sir is also involved in the specifically training of CAG, IIC for the training of MCA officers. Sir has also served as a national director to the PwC and also worked specifically for a EY. The list of experience of the sir is so long, and sir is also here to share the experience to enhance your analytical skills. All of you are the commerce students, belong to different various kinds of the scams which are happened in the financial statement. Now, sir will specifically taking the session on a special request, and it is a most important session of our workshop because sir is taking an interactive session, and I hope each and every student will participate in, and you will get a lot of knowledge by the sir. Sir, I request you
Thank
to
you.
kindly start the session.
Thank you, Renuka ma'am, for kind introduction, and good afternoon all. And we take up the our topic, which is on the financial statements. See, it's an art. Not only financial statement you can read by having knowledge, but your analytical skills also counts a lot. That how you apply your mind so that when you read a financial statement, everything is very clear. So today we will deal with those aspects which will enhance your reading capabilities of financial statement. And feel free to ask questions, and Renuka ma'am can moderate those questions and bring it to the discussion board. In India, we have Companies Act, which is guiding the preparation of financial statement, the format of balance sheet, income statement and cash flow statement. Everything is given in the Companies Act. How to prepare a balance sheet, the Schedule 3 to annex to the Companies Act guides us, and how to prepare cash flow statement, that is given in the accounting standards. So everything is driven by law. Any lacuna in preparing these formats leads to violation of the Companies Act. So I will take one by one. The way I will structure this discussion is that how we analyze particular balance sheet, profit and loss, and the ratios impacting to them, and what analytical skill is required. For instance, we start with balance sheet. Now in balance sheet, what is the biggest item we see is the fixed assets. Company finance its equity, it takes loan, but where it should go? It should go into the fixed assets. Money comes and is applied for acquisition of fixed assets. So first ratio which we should see in the analysis of balance sheet is fixed asset turnover ratio, because most of the funds are supposed to be applied into the fixed asset. For instance, if we have fixed asset of say 100 rupees, for example, and our turnover is 100, our fixed asset turnover ratio becomes 1. Is it clear? But higher the turnover ratio, fixed asset turnover ratio, higher is the expectation that a company will earn profit. So this ratio is important from that aspect. Suppose a company has fixed asset of 100, it has financed 100 rupees of fixed asset entirely by equity, and its margin are supposed to be 15%, net margin I'm talking about. So if turnover ratio is 100, that means fixed asset 100, turnover 100, then 15% is my return on equity, which is more than the interest rate. So it is giving a good result. But suppose in the same example, if my turnover ratio becomes 200, or say 2, my turnover is 200 and fixed asset is 100, and my margin is 15% again. So my return on capital employed goes up to 30%. So we must look at the fixed asset turnover ratio when we are analyzing the balance sheet, that whether it is adequate or not, whether company is able to capture a good turnover to fixed asset ratio. And if it is low, that means there are problems. Fixed assets are not performing to the extent it should have, because if you have a good fixed asset, it will produce goods and goods will be sold in the market. But if you don't get turnover, that means there is a problem in the balance sheet. Fixed assets are not yielding the desired result. Any ratio less than 1 is a bad ratio. That means fixed assets are not proper. There are issues related to obsolescence, or there are issues about technology in the fixed asset. Then we must, after the fallout of reading of this ratio, we must go and look beyond. Suppose it is below 1. Our idea is to look at that what is the issue this company is facing, that turnover is not coming. That means, is the technology has become obsolete, or there are management has not properly provided for the impairment loss of the fixed assets. So all those questions should come into your mind. You should start applying your mind in that direction. See, you must come out with 10 good questions. If I say that fixed asset ratio is better than 1, and if fixed asset ratio is less than 1. So in balance sheet, this is an important ratio. Hope you have understood this. And the implication of it. Then we go to the solvency ratio side of the balance sheet. Solvency ratio, first we should look at debt equity ratio. Debt equity ratio means that we start with the same example, that if a company has 100 rupees of fixed asset, now there are various ways that I can finance this 100 rupees, that I can invest 100% entirely from the equity capital, or I keep capital at say 50 rupees and I take the debt of 50 rupees. So I take 100 rupees of fixed asset. Here my debt equity ratio is 1:1. So that means it is not highly geared. The debt equity ratio is not, leveraging is less and leveraging is appropriate. We can see, but we will discuss more about it and see the implication that how debt equity ratio can go and make so many analytics which helps a company to decide a strategy, that whether they should go for obtaining loan or they should not go for obtaining a loan. So I will dwell with this ratio in greater detail so that you understand what is the implication of this ratio. And this is very important. So feel free to raise your question in chat box, and Renuka ma'am may ask that question. I told you in the first example that, say, we have assumed return on equity at 15%. Now let us go with the example. You can note down if you have a copy and pen, that 100 rupees was my fixed asset, 50 rupees I have invested through capital, and 50 rupees is my loan. So my margins are 15%. I earned 15 rupees. Assuming 8% of this interest, I will have to give 4 rupees of interest. So my net profit will be 11 rupees. What happened when I was financing 100% from my equity? I was getting 15 rupees net profit, but because I have borrowed, my profits have gone down to 11 rupees. So now question arises, whether a company should go for loan or not go for loan and finance 100% from equity. Because if you become a finance manager or a CFO of a company, the board of directors may ask this question to you. So how would you analyze this concept which we are talking about? Is goes towards a bigger concept called trading on equity. Trading on equity I will deal once I explain this in some greater detail. Here the question is that, okay, solvency ratio, debt equity ratio is 1:1 is quite good. There's no problem. But whether we should borrow or not will depend whether we can achieve a higher turnover by acquiring higher fixed assets. We discussed that if higher the fixed asset ratio is, we will earn more. So we enhance this example that we have a 50 rupees equity, 50 rupees of debt, and 100 rupees of fixed asset. 15% is my margin. Now, if I borrow 100 rupees more, what will happen? My share capital will be 50 rupees. You can keep down noting it in the example, so you will not forget in future. And loan, say, will become, say, 150, and my fixed asset will be 200 rupees. So my debt equity ratio is now 3:1. I have now leveraged my capital. I am having a risk on my solvency ratio because I have borrowed more. But let us see the profit part. How much is the profit we get ultimately? On 200 rupees, our gross profit will be 30% before interest. On 150 rupees, we have a 12 rupees of interest, and our profit is now 18 rupees. So from 11, we have gone up to 18 rupees. Our profit is going up if we are borrowing more. So it is a very interesting scenario that by taking more exposure towards loan, our profits are always going up. So long our return on equity is more than the interest rate. Here in this case, my returns on equity are 15%. That is why I have able to enhance my profit by borrowing more, because interest rates were lower than the return on capital employed. But if my returns were lesser, then borrowing will not make sense, because it will turn out to be a loss scenario. So it is called trading on equity. If you have a higher margin on capital, you borrow so long your profit, your return on capital employed remains more than the borrowing rate. So you will always enhance profit. But for that, you have to be cautious that in future competitors are not going to come in the market, and they will not disturb your margins. So that is how you should read a balance sheet also, that how a company is structured, whether debt equity ratio is appropriate, whether the EBITDA, that means earnings before interest, depreciation and tax, is commensurating with the interest rate, whether they are able to meet the interest cost and margins are intact. So that is what we should look into. In balance sheet, solvency ratio I have discussed. Trading on equity. I have discussed fixed asset ratio. Then there are other ratios which we can see is the liquidity ratios, inventory turnover ratio, and they will always be in the then current ratio. That means that will give how a company is managing its working capital, money is blocked in the working capital or not. So those analysis I think you can do. You must be aware they are simpler, so I am not going into much detail in those ratios. So unless you ask me question on liquidity ratio, inventory turnover ratio, you can I expecting that you should be able to analyze that yourself. So I am now going to profit and loss statement, income statement, what we should look at. What is very important in analyzing some of the ratios in income statements. See, first and foremost and worldwide which is used is earning per share and price earning ratios. I will explain you, though I understand you all people will be aware of this, but I will make this concept very clear to your mind so that you can understand why these ratios are so popular and why they are so important. Earning per ratio is nothing but, come to know that how much a company each share is earning. In our example, if equity is 50 rupees and say 50 shares of 1 rupee each are there in the equity, and profit was 15 rupees, that means per every share was earning 15 paise. So my earning per share is 50 rupees is my equity, and my every share is earning 30 paise. So I am getting 30% return on each share. By investing 1 rupee in the company, I am getting 30% return. So my EPS is 0.30 on a 1 rupee equity share. We should be very clear when we see EPS, what is the face value of the shares. Now companies are issuing face value of the shares in various denomination. It is 1 rupee, 2 rupees, 5 rupees and 10 rupees. So these are all to confuse the investors. Sometimes investors are not able to know what is the face value, and they are not properly disclosed also sometime in financial statements. So people get lost, but you must be able to see what is the face value and what is the earning per share of the face value, because our EPS will vary based on the face value. If there is a 15 rupees profit, 50 rupees of equity, but if the face value is 10, in the given example, I was saying 0.30, the EPS will go to 0.03. So you please understand that face value of the share also counts a lot. Now, having talked about earning per share in the profit and loss statement, let us discuss about price earning. What is price earning ratio? PE. And it is widely used worldwide, is determining the stock market price. For instance, people are saying that, Nifty 50, which is presently trading about around 16.5 of PE based on the projected profit of next year. So that means people are expecting that if earning is say 16, if all the market capitalization of all the Nifty companies taken together, earning to price ratio is 16. I explain this further by one example, lucid example. Suppose our company is having 50 rupees of share capital. Each share is face value is 1 rupee. So that means there are 50 equity shares of 1 each. Please note it down so that you can ask question and understand. So we have 50 equity share of 1 rupee each, and the total share capital is 50 rupees. Okay. And the price of the company, share price is of the company is say 200 rupees in the quoted listed market. So what is the price earning ratio is 4 times of my per share earning is 1 rupee. I'm having equity share of 1 and my price in the market is 200. So that means, and my earning per share is also 1 because 50 rupees is profit on the share capital of 50. So my price earning ratio is 200 in this case. Price divided by earning per share gives me the price earning ratio. Now, how many of you agree or disagree that this ratio is good or bad? Can people raise hand that 200 is high or low? Then we will deal it little faster. Renuka ma'am, can you see the raise of hands? No. It is high or low? Just type in the chat box. Aja, you raise the hand if it is high, and if it is, don't raise your hand if it is, not high. So there is 3 people said that, the price earning ratio is high. Fine.
Maksudji, kindly unmute all these students who are raising their hands. They want to ask something.
Yeah, please tell me.
Okay.
Hello.
Yeah.
Hello.
Yeah, I'm able to hear
good
you.
evening, sir.
Good evening.
Sir, if like the price is 4 times high, it could be said that the company is quite overvalued. So is it like true or something?
No. I come ask your question again.
So like you said, the price earning ratio is 4 times, which
No,
is
not 4 times, 200 times here.
Yeah.
See.
So can it be said that the company is overvalued?
Overvalued. Exactly, you are right. It is overvalued. You are 100% right. I think I am able to explain, but I will, for the benefit of all, I will go little deeper into that. See what I gave the example that we have a 50 equity shares of rupee 1 each. Capital is 50. Market price is 200. So what is my market capitalization? 10,000 rupees. And what was my share capital? 50 rupees only. So if I divide 10,000 rupees by 50, I get a 200 of price earning ratio, and it is quite high. So let me tell you which ratio we should consider as an optimum price earning ratio for an equity, and which we should say high, because here only 3 people said it is high. Those 47 people who could not raise their hand, for the benefit of them, I should give a benchmark to them that how to judge a price earning ratio. Let us see a very common day example that we take a loan of 100 rupees and we pay interest of 8 rupees. What is the ratio between interest and principal? It is around 12.5 approximately. So this is a benchmark of price earning ratio. So if you give 100 rupee of loan, you will earn 8 rupees. In the normal market circumstances, if I invest in a loan or in a bond, 100 rupees, the earning which I will have is 8 rupees. That means 12.5 is a very good ratio of price earning. There is no risk in this case. But a company, as I told you, is not earning interest. It has got assets, it has got a turnover, it is having a return on capitals, which is higher than interest rate. So market participants do not take 12.5 as a benchmark, and higher the management's operational profits are there, this ratio keeps on going. So worldwide, 16 to 18 people are not see that as a risky price earning ratio. But yes, any ratio which is above 20, 25, you will see many shares are putting at a price earning ratio of 50 rupees, 30 rupees. Those are very risky shares. That means people are thinking that in future, much more profits will come, or company has got a lot of good technological assets which will yield results in future. So they are giving a high value to that share and therefore a high price earning ratio. So what we understand that price earning ratio not only talks about the current operational position of a company, but also gives us a guidance that what will happen to this company in 2 or 3 years time. It appears that people are expecting huge profits in this company if price earning ratio is high. So there are various ways to read this price earning ratio. One is that if you find a company's price earning ratio, and this is given in the if you see any website of any stock exchange, you will this ratio you will get very easily, or you can simply calculate by dividing the earning per share by the market price. You will yourself be able to calculate it. So when you make a decision to buy or sell a share, you must analyze, use the analytics, that whether this company is really worth, or it is overpriced or overheated, or if the price of a share market is below that benchmark of 12.5, what I told you, that also people should understand that why price is low, whether that share is worth buying or that company, what is why people are doubting. Basically, a company which is having not very good corporate governance, the integrity of the management is doubtful, there people do not value that company, and price earning ratio of those companies are generally quoted below. Another situation arises in case of calculation of price earning ratio of holding companies. What are holding companies? These are non-banking financial companies. Suppose there is a McDowell Limited, company which is engaged in manufacturing of wine and liquor, which was earlier owned by Vijay Mallya ji, and now it has been taken over by some foreign company, United Beverages. And the entire holding of McDowell is lying with a holding company whose price earning ratio is very low. Say it is, instead of 12.5 a benchmark, it is having only 8. So why so? Let me explain you why the prices of holding companies are always on the lower side. Because holding company itself doesn't perform. It is dependent on the performance of its subsidiary where it has invested. So generally, the price earning ratio of holding company is dependent on the market capitalization of the subsidiary, and it is between 40 to 50% of the market capitalization of the subsidiary company. That's the way to use analytics in case of holding companies to see the ratios. We should not get disturbed, that your ratio is very low, even though the subsidiary is performing well, because reason is why it is low, that management is not going to sell those shares in the market because they will like to have the control for future. So there is no liquidity in that share. So that is why people do that. So in profit and loss, how many ratios we have studied till now? It is earning per share we have understood. We have understood price earning ratio. Then what is the operational profit ratio? That also we should see. And in operational profit, the best is EBITDA. What is the earning before income tax and depreciation and interest? That ratio is widely used for knowing the operational efficiency of any company. That means income tax is omitted. There is no income tax is a state legislation tax, nothing to do with the operation of the company. Interest is dependent on your decision and strategy of a company to how to borrow. So that also is eliminated. So you see the pure earnings and earnings of any particular product gives you the behavior of the product in the market. And generally, it should be above, say, any ratio EBITDA above 25% to 30% is considered good, because it takes into account 8% income tax, then the 30% income tax on the profit. So it should be above 25 to 30%. Anything below that in EBITDA gives doubt to an investor that whether they should invest in that company or not. So that is the operational efficiency ratios we have to see. And then we have to use analytics in profit and loss. That means, what are those analytics in profit and loss? We should see what kind of company it is, whether it is in export, or it is import dependent, or it is dependent on commodity prices. So that we have to analyze in great details. For instance, if company is 100% dependent on a commodity price, what may be those companies? Examples like Nalco. It is totally, turnover is dependent on the international aluminum price. If I see the 100% sales of Nalco, I can calculate it on my calculator or a computer by taking the LME price and the production last year this company did. I multiply these rates, I will know the expected sales of this company this year. And what was the net profit margin last year? I will be able to see what will be the profit of this company this year. So this helps us by understanding the various components of the profit and loss. It helps and it enhances our analytical skill to understand what will be the profit. So I told you one is that commodity dependent. More examples of commodity, maybe oil marketing companies. Their prices are linked with the international crude market price. Then another category of company comes is seasonal industries. Seasonal industries are, say, sugar industries, fertilizer companies. In sugar companies, production takes place only for 6 months, November to May, and 6 months the plant is shut down. It is under maintenance because there is no sugar cane to crush. The plant is closed. So what happens in this typical seasonal companies, that for 2 months the results are very good. You have profit ratios, you have earning very good, but in 2 quarters you have loss. So you can't make your decision just because of a lost quarter, because it was a non-season business. So we have to be very careful in reading that whether it was a business cycle or the cyclical nature of business has given the fluctuation in profit, or what is the reason. That analytics is required. And one company may have, say, various divisions. For example, say ABC Limited has three divisions. One is sugar industry, second is fertilizer industry, and third is consumer products. Now see the sale behavior of these three companies. Sugar will be produced 6 months only. Fertilizers are produced throughout the year, but are consumed only in the rainy season when the crops sowing takes place. And consumer product sales fluctuates from seasonal festivals, or the Diwali time people buy a lot of products, or the New Year Eve people buy products. So in this case, the analysis become very, very difficult. And segment ratios, then you have to look at not the profit and loss, we have to look at the segment results. Each segment, consumer product segments. Are you all people aware of what is segment profits? There, please raise a hand who people do not know now. Just raise the hand. The people who are little uncomfortable with the word segment ratio. Any raise of hands? I assume everybody knows. So in this kind of companies, we should look at segment results. Segment, we have an accounting standard separately. So we should read that accounting standard, and based on that, we should look at segment results and find that which segment is giving profit in this particular quarter and which segment is not giving profit. So these are broadly the main ratios which we should look. What else we should look into the profit and loss is analytical review. How would you treat a company whose sales is going up, but raw material consumption is going down? What it indicates? Say a company's sales in last year was 1,000 crore. It has gone up to 1,500 crores up by 50%. And last time raw material consumption was 600 crore. That means 60% of the sale. This time it has gone only to 700 crores. That means only by 12% or 15%. That means that is an indicator of a fraud. It is a big indicator of a fraud. That company has tried to manipulate its sales and profits. So we should not be taking it lightly. We should go further now and see what kind of raw material they are using. Has really the price of the market price of the raw material has gone down to by 30% or 35%, or the finished price goods have gone up by 30 to 40%, then only we should expect and accept these ratios. So these analytical ratios in profit and loss, that means one comparison of figure with another comparison which are interdependent also helps us in analysis of a profit and loss account. So if your sale is going up, another ratio which we should see is that increased sale should have increased the production, and that is why the power and fuel also should have gone up by 50%. If your turnover has gone by 50%, production should have also gone up by 50%. So your power and fuel consumption should also go up by 50%. Your salary should also be little higher than what it was last year. So this ratio analysis of individual interdependent heads of accounts helps you a lot in understanding the behavior of profit and loss. Then comes the question of exchange rates in the case of profit and loss account. That means how exchange rate is affecting my profit and loss account. It happens mainly when technological companies, software companies, where most of the sales are abroad, say 80% are on my export turnover. I'm doing the US projects, or I'm selling my services in UK or some other foreign countries. And there is a dollar appreciation of 5% to 6%. So I would expect that everything remaining normal and constant, my turnover should go up by 5% at least. Likewise, in manufacturing companies, if I am importing heavily and the dollar has appreciated, my cost of production should go up. So we should analyze always that how much imports or exports a company is doing and how much is the impact of foreign exchange in the profit and loss account. That we should look at. Schedule 3 of the Companies Act requires every company to disclose exchange losses, foreign exchange losses separately, so analysts can use that as a benchmark, that how much company has lost on account of foreign exchange fluctuations. And people take a position, going forward, what will be the exchange rate, so the company's profit will become better or worse. And accordingly, they decide the earning per share of future and price earning ratios of the future, as I discussed earlier. So these are the main things we should look at the profit and loss account. Now we go to very important element of financial statement is cash flow statement. And there we will discuss that what kind of analysis is required and what we should look at the cash flow statement. So we have a fair grip of the company's business. And then I will deal all the 3 elements of this balance sheet, annual financial statement, balance sheet, profit loss, cash flow statement taken together. I will discuss few important aspects. How a cash flow statement is structured, you must be knowing it. But for the sake of convenience of all, I'll take 1 minute to explain that what cash flow statement actually is. Cash flow statement starts with profit before tax. And then we add up all the non-cash items to this figure. Suppose our profit was 100 rupees and our interest cost was 10 rupees. I will start preparing cash flow statements with a profit figure of 110. And if I had paid, say, 25 rupees as tax, that I will add. So my starting cash flow statement will be that my profit before tax and, is 135, and then non-cash items I will add to this. Non-cash items are what? Basically depreciation. So if 20 rupees is depreciation, I will add. So everything which I have not earned in, say, cash items, I will deduct. And if I have paid something or debited my profit and loss account, which is I've actually not paid by cash, I will add to my operational profits. Like depreciation, I never pay. It's a notional loss. So I add to my cash flows. Fine. So this is the way we start cash flow, and then we come to a figure of operating profits in which we adjust my working capital additions or deletions. If earlier I had a working capital of, say, 1,000 crores tied up in my all the debtors and creditors, my working capital, net working capital was 1,000 crores, and this time the working capital has gone down by 800 crores. That means my operational efficiencies have become very good. So that 200 crore is added to my operational cash flows. So if I had 100 crores of operational cash flows before tax, before depreciation, before interest, I will then add 200. So I will get a operational profit along with working capital changes of 300 crore rupees. Is it clear to all? If somebody is not clear, please raise your hand so that I can explain further. Anyone who wants to understand more about it? because it is a little complicated, I understand, for BCom students. No hands raised, I understand, people are understanding it. So I go ahead. So cash flow, I summarize, we start with profit before tax, depreciation and interest. We adjust the working capital changes to this figure, and then we get an operational profit. Then we divide, this is my source of funds in the company, and then how I apply it, that is what investors look at. So if, say, hypothetically, I have earned cash along with the changes in working capital, which has amounted to 1500 crore rupees for hypothetically, the utilization has to be divided into three parts. How I have paid taxes out of 1500 crores, how much is tax I have paid? Then how much I have used for investment activities out of this, and how much I have used it for financing activities. So this is what is very important. We have to look at that how company is applying its earning. Why tax people are showing separately in the cash flow? See, one very big investor from US called me one day that this company is particularly having huge profits over last 10 years. I have a doubt that whether company is really earning this profit or not. My simple answer to that person was that you go to cash flow statement and see whether company is paying taxes on that profit. And if genuine taxes have actually been paid, it means it's a earned money. It is not a fictitious income. So how much tax a company is paying actually tells us that it is a company which is genuine, it is tax paying company. We should not doubt on the earnings of this company. So if 1000 crore was profit out of the 1500 crore rupees, and if we see tax paid 300 crore rupees, we should be reasonably satisfied that profit shown by this company or declared by this company is good, and element of fraud risk is little lesser. It's not the conclusive evidence, but yes, we get some comfort by looking at this item of the cash flow statement that yes, taxes have been paid, so we can safely assume that profit part is little better. Then second item is how much I have invested in my investment activities. What are these investment activities? Any acquisition of new fixed assets also comes into the investment activities. If I have invested in subsidiaries, I have bought mutual funds, I have invested my surplus fund in some other trade companies, everything will come in this investment activities. So you will be able to understand by this column that companies initially earned 1500 crores with working capital changes, 300 crores were paid, so 1200 crore remained. Then if this 1200 crore rupees, I can analyze that it were used to finance fixed asset by 1000 crore rupees. It's a very, very comfortable situation for me as an investor that company is playing very safe. The profit earns are going into the fixed asset, and the future profit will go. And how much profit will go up, I can calculate by fixed asset turnover ratio. And by fixed asset turnover ratio, I will know the revenue amount. And by revenue, I can understand the net profit margin on the revenue. And I will be able to know how much profit will be increased in next year and how much return on capital employed, therefore, will be higher. So I think you understand now concept of various ratio interacting into play. So if on the contrary side, instead of 1000 crores rupees invested in fixed asset, you see that 1000 crores were given to as a loan to related party. So that will give you a very, very discomforting situation. It's something what you never wanted as an investor, that it was your shareholders' money, which company should have invested in the business, but rather than investing in the business, it was shelled out to the related parties and loans were granted to various subsidiaries, etc. So there is an indication of that money is getting siphoned off. These questions you can raise in the annual general meeting with the management, that why it's so. So after taxes, the cash flow, very important part is investment activities. You can see the money, how the money has been uh, used by the company, whether it is conservative, whether it is prudent, whether it is for expansion or for suppression. Suppression means money is getting siphoned out. Then the third element in the cash flow is financing activities. Here you come to know that how much company has taken fresh borrowings or how much company has paid the past borrowings, and what is the interest because element company has paid on the entire finances it has availed during the year. So everything you will understand about the gamut of finance which has taken place during the year. If your company had a profit of 1500 crores, there was no investment by the company, ideally there should not be fresh borrowing taken. If company has borrowed money and then given loans to subsidiary companies in investment activity, it's a big question mark. That means it's a high risk company. So this analysis of cash flow, I think I've been able to explain you. If any doubt remains, please raise, because it's an important, raise your hand and tell your question to Renuka ma'am or type it, then we can answer. Take 1 minute on the entire cash flow. And please ask the question that how you started preparing cash flow, and then how you adjusted working capital, then how the three elements were showing the payment part, taxes, investment, and finance activity. Any question, any doubt you have? Then I go further. If there is no question, I assume that either I was too lucid in explaining or it was too complicated that people did not understand. So let's go further. Now, let us look at the three elements, the balance sheet, profit and loss, cash flow taken together. What further things we should look into a financial statements? The next important element which comes is auditor's report. How to read an auditor report is also very important. Do we understand what are qualifications in auditor's report? Please raise your hand that if we understand what is meant by qualification on auditor's report. I think people are not, Renuka ma'am, people are not interested in hearing.
No, sir, they are listening, sir. They are listening. Students, please interact with the sir. Sir is waiting. You have specifically aware about that. There are 4 kinds of the auditor reports: qualified, non-qualified, clear report. Yes.
So people are knowing it. I'm very glad that people know qualified, unqualified, and modified reports. So it's very good that people are aware of this. So in auditor's report, we must see what are the auditor's qualifications and adjust the profit to that extent in our understanding. And for your knowledge, that SEBI has stopped taking any listed company's auditor's report, which is a qualified auditor's report. And all the prospectus, if you go to public issue, they don't accept any prospectus in which the auditor's report is qualified. They don't entertain at all. Those prospectus reports are returned to the companies that you are not eligible for coming out with a public issue. So you also should know what are the elements of qualification. Then there is a CARO report, company's other auditors report, in which you should see that what are the qualifications. Mostly that statutory dues are paid in time or not by the companies, whether fixed asset records are prepared or not, whether loans have been given to subsidiaries, what I was discussing. So those things should be read very properly so that you come to a conclusion that these accounts are giving true and fair picture, and you have got no problems in understanding of management and affairs of the company. Now, let us go and see the strategy part of the company, which ultimately results into culmination of profit in the profit and loss account. Say there are two types of companies in which turnover is high and net margin is low, and another type of company where turnover is low but the profit is high. Anybody can take this question, that what may be the reason that turnover of a company is high and margins are very low? What kind of company this could be? And another set of companies where turnover is on not so high, but still profit is very high.
Yes,
These are the
students, sir is conveying indirect relationship between the turnover and profit. Otherwise, whenever we are talking about turnover, sales, obviously it is directly related to profit. So sir is saying there is a vice versa relationship. Turnover is increasing. Yes, yes. Ayush, you have
Ayush,
raised your hand.
please tell.
Maksudji,
Please
please.
tell.
Good afternoon, sir.
Good afternoon.
We have seen some conditions where, in case of some companies, the assets are mostly like the asset may seem high, but in reality, the debtors are a lot. So basically, although it improves the image of the company or the overall net worth of the company, but actually it shows that the company has not been successful in actually converting its debtors into cash. So it might happen in that case, sir.
No,
That the
no.
assets of the company are more.
No, I will explain. I think that is why, see, I just wanted to understand that how much in great detail I should deal this topic. So I got the feeler that I need to little explain this topic to you. We should now understand, one are the turnover based companies. When we are talking about analytics, it is very, very important thing. Turnover based companies are those companies which are dealing in the volumes. They are high volume companies, basically sort of trading companies, and they are acting on the thin margins. Another set of companies is which are high technology companies. They are not interested in trading. Their products are so good that they command premium and they are very high net profit ratio. Like if we talk about Boeing is a company which manufactures aircraft. Or we talk about Hindustan Aeronautics Limited, which earns a lot of profit on the defense order. So these are technology companies. They have got best of the technologies. Nobody can compete with them. They are not worried about the turnover. They invest heavily in acquiring technologies. So their cash flow will see that they have incurred lot of cash in paying to engineers salary, developing protocols, buying technologies from abroad, or buying protocols from the foreign companies. So this analysis helps us a lot. And when we compare two companies in analytics, first we should bifurcate the basket of company into two categories, whether one is a technology based company or one is a turnover based company. That means it is playing in only in volumes. They want to earn profit. And one is very sophisticated company. It has got invested thousands of crores in technology. Like Boeing would have invested billions of dollars in technology. So the premium, the price earning ratio which a technology based company will demand is much, much higher, maybe 30 times higher than these trading companies. Or In India, basically, most of the companies fall into the trading bucket because I don't see. Yeah, Ayush, please raise, you have raised the hand. Please ask the question. Ayush, you have raised the hand. Any question?
No, sir. Actually, I forgot to
Okay.
unraise it. But sir, basically, what you're trying to say is that there are some companies who, like you gave the example of Boeing, right? So when it comes to in terms of cash flows, these companies actually invest a lot just for acquiring the technology, which is
Yes.
going to make the work even more easier or advanced, right, sir?
So that
Okay, sir.
where you will
Then
see this invest.
don't tech companies also do the same, sir?
Yes, technology
Like
companies also
there are a lot of
they develop
technology which is not
softwares.
available for, yes, sir.
They develop software. They invent a lot of new products, and that you can see in the fixed asset schedule itself. That will lie in intangible assets. These are all protocols, trademarks, designs, drawings, which they have developed over the period. And AS26 deals with those accounting, and you will find that in the balance sheet how much technological assets they have got in their balance sheet. Fine. So we have to understand by reading all the three elements of the financial statement that whether it is a trading company sort of, or it is, say, even Tata Steel, for instance, it is what? It is dealing in steel product. Please tell me, you will bifurcate this into a technology company or in a trading company? Just merely by having a production process, frankly speaking, doesn't determine that company as a manufacturing company unless they have created new technologies, new inventions. This we can't say they are the technology based company. It is actually market determined turnover. They have got raw material, just little bit of processing, and then they are selling it. So it is largely the margin and turnover based companies. But if you say that Tata Steel has developed a protocol which is having a good quality in their steel product, a better strength product in their capital product, laster longevity, then it will be a technology company. So even a trading company manufacturing company can classify as a trading company, or sometime a technology company based on the definition used in analytics. When you are analyzing, you should give premium to the companies who are investing a lot in the technology and uh, future products. So now I deal with certain part of the accounting standard which are instrumental in preparing this financial statements, and also certain auditing standard which determines your skills to read this financial statement. I take, as we were discussing, that fraud standards are very important because anything, you have read the balance sheet, you have read the profit and loss account. But ultimately what happens is that everything you found ultimately was fraudulent. How to determine that the fraud elements, you can't say 100% that fraud is there or not, but you can always have a susceptibility that yes, there are chances that fraud may exist in this financial statement or may not exist in that financial statement when you are reading. We have seen few frauds in the past, like Satyam. I'll take 5-10 minutes on that fraud, that how it happened. Like we discussed about the growth of profit and loss of account, how the company will grow, we can analyze by fixed asset turnover ratio, etc., etc. But best way to read is how a company is growing is to compare the growth of that profit and loss account or the turnover of the company with the market trend, industry rate, not only the trend in India, but also abroad. So what was the biggest problem in Satyam was that software companies in India were going up by 10 to 12% or 14%, but Satyam consistently went up by around 20% each year in the last 5 years. So if you see that the growth in the company is not commensurating with the peers in the market, there is a suspicion that there can be a fraud element. And market participants do know this, they understand. But once you see this, what will be your duty? Say you are seeing that growth rate is consistently higher than the market trend. How you will analyze from the financial statement that the balance sheet is fraudulent? In the case of Satyam, what happened? This increase of 5% extra sales shown in the profit and loss was parked in fictitious fixed asset or sundry debtors. So you will look at the quality of the debit side of the balance sheet, that is there any asset which is proportionately going up continuously over 5 years. You will have understanding that there is chance of fraud, because merely by increasing the turnover you cannot get cash back from the market. You have to actually reflect that in your cash and bank balances. So your cash flow should deplete that your cash and bank balances have gone up rather than your sundry debtors have gone up or something else is going up or your creditors are getting lower. So that should not be the case, right? So, and the biggest company, if we look at the fraud pyramid, the fraud pyramid has got 3 angles. One is that opportunity to do fraud. Third is that whether the possibility of doing fraud exists, or what is the incentive of doing fraud. So opportunity, ability, and incentive. These are the 3 elements of fraud happening in a financial statement. Can you remember this? It's a very important fraud triangle definition in auditing standard number SA 240. Opportunity, ability, and incentive to do fraud. When is the incentive to do fraud? If employees are paid high ESOPs, you say that if all the employees will get 5,000 shares, that means 5,000 multiplied by say 200 rupees, that means 10 lakh rupees each employee will get if the profit goes up by 25%. Management has announced it. Is it not an incentive to commit fraud? Because if the company's bottom line is increased only by 15%, there will be all attempts to commit fraud that somehow profit goes up to 20% and all the employee get 10 lakh rupees as a bonus or say ESOPs, so that everybody becomes rich. So it's an incentive to do fraud. So this can be read by reading director's report, or there are specific disclosures required for ESOPs. And secondly, after incentive, is there any opportunity to the fraud? This is a very, very important thing we must understand while reading a financial statement. When opportunity arises to commit fraud, say there is a SEZ zone. SEZ zone means you don't have to pay profit tax on that profit if you are situated in a software zone, notified the export zone. So what you will do is that if you install a factory in a SEZ unit, software export zone unit, you earn 100 crores of profit and you don't have to pay any tax. So it's an opportunity for you to do fraud. So why you will say only 100 crores as profit? You will say, boss, I earn 500 crore of profit. I inflate my invoices, I do everything, and my share market price will also go up. And here I don't have to shell out anything on account of tax. So if you come across this kind of companies, you should not believe on the profit unless you are very sure that whatever is shown as sales has culminated and is reflecting in the cash and bank balances, not by way of increase in debtors or increase in working capital or money given by loan to related parties. So these are the inner elements to read financial statement and understand whether there exists a fraud element or not. So one is another element I will discuss is ability to do fraud. When the ability to do fraud comes, ability to do a fraud comes when the internal controls of the companies are weak. That means management overseas function is weak. You do a fraud and you will remain uncaught. So you have got the ability to do the fraud. You can do fraud. You will, instead of getting a conveyance voucher of 5,000, you will raise 10,000 rupees of voucher. Instead of giving a purchase bill of 5 lakhs, you will raise it at 10 lakhs and it will remain undetected and fraud will happen and ultimately the company will go in bankruptcy and shareholders will suffer. So this is a cycle which is there and we must be able to categorize the company, whether it is falling in that pyramid or not. If the auditors have said, the central government, that is why required auditors to comment whether there are internal controls and they are commensurating with the business of the company or not. And any weakness notified should be reported in the auditor's report. Auditors are now required to separately report on the internal controls. Earlier, there was only one paragraph required in the Caro audit report, but now there is a separate report and required under section 43 on the internal control. So if you see that there is a qualification or internal control, then your belief on the profit should get reduced, because that means there is an ability to do fraud in this company that has gone up. Similarly, if it is in the SEZ unit, you again have to challenge. So basically what we have discussed till now is balance sheet, profit loss, cash flows, auditor's report, quality of the financial statement from different angle. And anyone has done any study on financial statement and was able to find the similar kind of things which I have explained? Any example, good or bad? Can anybody share? Take 1 minute and then I will take after this, after 1 minute, I'll take one more example on fraud, that how analytics helped the fraud investigators to understand the fraud element in a financial statement. I'll give one example and then wrap up the session. So no example, nobody has tried to analyze the financial statement from various angles we discussed today. Ratios, analytics, I think you will be able to do in future. And so I now take one famous fraud which happened in Italy. Italy, what happened, that it was a milk selling company, a dairy company, and it has shown a turnover of 10,000 crore rupees, and it has taken a loan of around 800 crore rupees loan from Bank of America, and it has shown huge profit of, say, consistently every year 1,000 crore, 2,000 crore, and it had shown 10,000 crore rupees approximately as a cash and bank balance. And people said it's doing very well. Every year there is a profit, and 10,000 crore is the bank and balance. So everybody thought it's Parmalat is a very, very good company. It got listed in US. Italy was the manufacturing place. And as I told you, that Bank of America has borrowed, given loan to of 800 crore rupees to this company. So when they saw the balance sheet, that company is having huge profits and cash and bank balance, so they wrote a letter to the companies that why you are not able to repay our loan. The last installment was defaulted. So company did not reply. And for your knowledge, the auditors did a very good job in this case. They had obtained bank confirmation from the bank in which the money was lying. Let me tell you that also. There was resistance from the management. Auditor sent the bank confirmation request to the bank 3 times, and the confirmation did not come at that point of time. But when the main auditor, the partner of the audit firm, was signing in Italy, this firm, it was a Grant Thornton partner. The audit committee chairman said, fine, this will come within 5 minutes. You fax your confirmation requirement on this number. He's the bank manager and he will reply immediately. The audit partner sent the fax and he got the confirmation of bank and balance, and the partner signed the balance sheet. And after that, Bank of America raised this question that why I was not paid. So he wrote to the bankers directly that boss, company is not cooperating, is not replying, is not paying us. Can you tell us and attach at least to the extent of 900 crore rupees which we have paid, keep in the bank so that they don't misuse it. Bank immediately wrote to them that we have nil bank balance with us. There is no bank balance lying in our account of this company. So what was it? It was a total fraud. Auditors were also cheated. And then the question came on auditors of that company that why you could not read the financial statement well. When a simple fax from bank could detect the fraud, why you could not detect this fraud? And you know what was the findings of the fraud detecting agencies in that country? And based on that, the partner who signed the balance sheet was jailed for 3 years. It was, as I told you, that it was a milk manufacturing company. So simply in 1 hour, the fraud detecting agencies, what they did, they divided the entire turnover of that particular year of the company by the population of the entire territory in which the milk was getting sold, like say Delhi NCR region, if any company is selling, that population, if you take and divide that turnover, it was coming 3.7 liter of milk consumed per person per day. 3.7 liter of milk was consumed per day. So this is what is the power of analytics. A person cannot drink so much of water in particular one day. I think 1.5 liter is enough. People don't drink water, but in this case, they were consuming 3.7 liter. Even the children were drinking 3.7 liter of water every day. So fraud detector said, what kind of analysis you did? If within 1 hour we can say this is an absurd figure in the balance sheet, why could not you? So use of power of analytics is huge. Similarly, you can also do calculations in pizza selling companies, or in a hotel industry you can do. In aircraft industries, you can use this kind of analytics, that how many seats are there or how many beds are available in hotel, what is the occupancy rates, multiplied by the average room tariff, you can come to know. Even in telecom companies, we know that subscriber base is 50 million or 60 million, and average rate of a telephone charges, we know 300, 400 rupees. If we multiply by that rate, we can come to know somewhat is the turnover of that company. So this is the higher grade of use of analytics. As we discussed, the analytics is a combination of ratios, qualitative reading of financial statements, categorization of financial statement into technology companies, trading companies, normal companies, companies which are falling into fraud tangles. So these are what is my suggestion to you on reading of financial statement. I'm not going to deal in accounting standard because it will complicate. Someday I can discuss about accounting standard if you require 8 hours course. Renuka ma'am, if we need help on accounting standard, we can have
Yes,
another
sir.
session.
Yes, sir.
So
Yes.
I'm keeping this very simple to the topic of reading of financial statement. So this is what I had to say. Any questions from people for the next 15 minutes? I can take.
Yes, sir, please.
Or Renuka ma'am, you can moderate.
Yes,
If
sir.
you,
Yes, sir. We are getting the questions.
Yeah.
Maksud, sir. Maksud ji,
Yes, ma'am.
please make Harsh, sir. Dr. Harsh Kumar, sir, is here. Dr. Harsh is here. Kindly give him right. He wants to ask something from sir.
Yes, ma'am. Done, ma'am.
Yes, yes.
Yeah,
Welcome,
sir,
Mr.
sir.
Harsh.
Yes. Dr. Harsh, you can ask. I think Harsh sir is not audible. Sir,
Yeah.
please ask the question.
Yeah, sir. Thank you very much for the enlightening session, sir. I had a small query since you were telling very insightful findings of Satyam case. I have also been an auditor in banking for like 5-7 years prior to MIT assignment. So my just basic understanding for the sake of knowledge that the auditors, I believe, are given a set of pre-decided list whenever they are auditing any company. So in the case of Satyam also, the auditor would have got some pointers on which they have to take the samples, not more than 10% samples that they can take from the actual data. And based on that, they have to feed in some software. So how can they be pinpointed for the detection of fraud or something which is systemic?
I take your question, Mr. Harsh, and you have raised a very good
unethical
question.
act has been done by the auditors.
I will explain you in, see, there is an auditing standard on sampling. Okay. There is a separate auditing standard. And it's not that auditors have to stick to their points which they have made. It's not correct. Auditors have to have their risk assessment when they are doing audit. First, they have to see what are the risks in this particular company. And based on that risk, risk also are categorized in the auditing standard. There is a separate standard on the risk auditing standard. So what auditor has to look at, what are the material class of transaction in particular company? Say in a Satyam kind of company, the material class of transactions will be sales and receivable, and on the debit side, the salary expenditure part. So those risks they had to take into account. And after taking into account the risk, they had to draft an audit program to address those risks and see what controls the company has to counter those risks. And after analyzing those controls, they had to come out with their audit program to check those controls. So, and then sample is not that 10 or 20. See, what the standard says, that you take some samples first to corroborate your understanding on the controls, whether they are correctly working, they are operational and effective or not. And if you rely on the controls, see, the audit is also divided into two parts. One is that control-based audit, risk-based audit. Second is, extensive audit. Now, if you do not rely on the control, then your extent of checking will be much, much larger. Maybe you have to cover not 10 watcher, 20 watcher, you may have to go to 2000 watcher. Your substantial audit will go up into a large extent. Your confirmation procedures will go up much large. So those things were done in Satyam, but the Satyam fraud happened very meticulously. It was designed. It was very difficult for an ordinary person to detect it, because they created fraud websites of the banks. So the person who went to check the bank balance, in the market we are listening that 3,000 crore rupees of fixed deposits were duplicate and the auditor did not verify. The fact is that they did verify online. But the online which they checked was a fabricated website, ditto to the banker's website. So you will not have a doubt. Say you are opening your saving bank account in SDFC Bank and you are checking your bank balance even for your own account. So an auditor goes and check the bank balance of the company in a website of the SDFC, and he says that you 3,000 crore is lying there. And he takes the screenshot of that, keeps in his file.
Right.
He thought that I have done my duty. But he could not realize that this is not the website of SDFC. It is a fabricated website designed equivalently to the SDFC Bank.
Oh.
So it was a
So somewhere down the line,
meticulously.
like the cyber hacking has gone to a next level where the
It
auditors
is
have the
one
additional
could not
responsibility of.
dream of it. The second part was that 18,000 people were fictitious staff. They were non-existent. But what happened? Their bank accounts were opened and salary was getting paid to them by bank.
Disbursement was also made, yeah.
So everybody, the bank, when you check the salary part, you found that everything is there. KYC is there, permanent account number is there. That is how the bank account has been opened. The money has been transferred. So it was.
I think so. After that, field verification was made mandatory because these fictitious accounts were opened, salary accounts.
No, not exactly. That has not been done. I was, as I told you, I was part of the committee on the Companies Act, and we thought to bring in many checks and balances, but they have been diluted now to a large extent. The proposal is there now to earlier we got in the Companies Act the imprisonment for fraudulent accounts. If you prepare an account and there are problems, then the person who has prepared it or audited it will go to jail up to 3 years. But the ministry has moved an amendment to that criminalization will get reduced. So you will only have to pay a penalty of 2 or 5 lakhs. You will not be jailed. So those kind of changes are now taking place. So it has got a various dimensions, the political angle also to this. That how our politicians draft the act changes the Companies Act.
But that will ultimately lead to these AML transactions if we are diluting the procedures.
See, the anti-money laundering transactions, there is no checks in India. I'm very honest, I'm in the field of audit for 82 onwards, so 40 years. And I have not seen any auditor doing a good job by using analytics in anti-money laundering. It has to be enhanced, and in last, say, 1 or 2 years, the enforcement director has done a wonderful job by arresting many people, and it is getting now importance. And more importance is attached to it, the more clean financial statement will come out. Your point is very valid.
So I'm glad you raised this topic, and one related query I had in mind since the beginning of the session. Like, so what is your take on this Punjab National Bank fraud, where 143 times this letter of undertaking (LOU) was renewed by a person of deputy manager standard rank, and ultimately he was made a scapegoat in the entire episode, rather than the big shots being brought to the book. So what do you think about?
See, your point
from the
is
auditor's point of view.
Yes. First of all, before telling this question, IT controls in India, income technology related. See, IT control when a bank uses an IT system or a company uses an IT system. In India, there is no proper checks and balances for audit of IT systems. If IT systems are robust enough in a bank, and a bank which is using day and night the IT system, online banking, everything, it has to be very robust. So here in Punjab National Bank, what happened was that this letter of credit were supposed to be entered online into the banking system.
Yeah.
So to
That
reflect
was
the
not a
content
part of their core like financial
for
system or whatever they
financial
were
system,
using.
they did not enter. They intentionally did not enter into the financial systems,
Right.
and it was all offline liabilities. If it would have been entered, the board of director could have been penalized. What we are saying that big shots were not caught, but they got an escape because they said this books of accounts were not reflecting this liability. We were not aware.
But
So
there
it,
must have been some, sir, there must have been some authority which oversees this entire
yes, everything. See,
sharing
the
or
first is
of the
that
data.
particular
Like,
branch, particularly branch should have been made. All the people who has worked in that branch are liable, number one. Then internal auditor of that particular branch, concurrent auditor of that particular branch, statutory auditor of that
yes,
particular
concurrent
branch.
auditor's responsibility becomes all the more important here.
Yeah, those four, and also the controls, that how you delegated authority up to such a large level that you can pass up to 1,000 crore rupees. You know, the what question is on the why did board delegate so much of power to the downside? You could have kept the bank branch liability up to 100 crores, 50 crores maximum, and anything above 100 crore could have gone to the regional managers or zonal managers place. So those are the questions one should ask, that what happened to the delegation of authority, and why your IT systems were not used to record this particular letter of credit, which was supposed to be done, and who monitored the IT system and checked with the monthly, manual registers. It was lying only in a manual register.
Right. So
So
that is
it
a
was
dilemma of Indian financial systems, sir. I see that like we blame it on the
it is a
systemic failure, like what happened in Arshad Mehta's case
callousness.
also.
There are, so I summarize your question as a callousness on part of auditors also, part of the management also. We are not using IT systems as IT systems. We don't know. We don't see the controls inbuilt in an IT system and assess our control risk in an IT system. If you are, that's what I'm saying, that when I discuss about incentive, ability, or opportunity to do fraud, here it was an ability to do fraud as well as opportunity to do the fraud, because system was giving me an opportunity not to enter this particular letter of credit in the system and yet give it to the party and over, and internal controls were so weak that nobody was checking it. So I had an ability. So that is what every time one management has to question this fraud triangle, incentive, ability, opportunity. If these three exist, anything can happen in that company, even in your own house. If nobody oversees this, anybody can do anything. The frauds will happen.
Yes.
So Punjab National Bank is a classical example of, and I had a fortunate experience of doing the audit of Punjab National Bank. 85 it was, 3 years I was a statutory audit.
Okay.
And my first question to the person who was granting loan in a Calcutta branch, which is the PNB House branch, very big branch. He was living in 1985 by paying 30,000 rupees of rent in a Bangalore. His salary was 15,000. So I raised the question to him that, Anand Sahab, where you stay? So I knew that he's living in a Salt Lake City of Calcutta, having an independent Bangalore, and rent is very high. So auditor has to look to the lifestyle of people who are giving grants. So, and there was very tough time for me to do audit. And let me tell you, that guy committed suicide after 2 years. He was caught by CBI by giving wrong loans, and the guy committed suicide. So if you see this entire banking system, there are problems. And if I, as an auditor who visited only 10 or 15 days in a branch, can see a manager living lavish style, don't you think the chief general manager would have known it? He would also understood that this guy is incurring 1 lakh rupees of total expenditure in a month, whereas salary is only 15,000. So where from he's getting all other monies? So these checks and balances in banking system are required, which unfortunately RBI is not able to monitor.
Right. The basic pillars of
and it will go on. It will go on. Let me tell you, the frauds have not remained undetected. There are many frauds in the bank's balance sheet which have not come out.
So I think the the entire searchlight of the central government or enforcement directorate would have to come to this chartered accountancy. There are some areas like in pharmaceutical, some industries which have been left out within this after especially demonetization. So unless there's a concerted effort or a vision, long-term vision by the central government, nothing concrete would come out, and we'll have to deal with one-off cases every time. And we can take corrective action by auditors
Let me
being
tell
more
you,
watchful. Yeah.
sir, I am a fond reader of balance sheets. Last 3 months, I have detected 8 companies with 4,000 crore rupees of fraud each. And
Oh, really?
and to your surprise, I have written to everybody in the regulator, no action has been taken. Rather, the finance ministry has taken it as a criticism of itself, that I am criticizing finance ministry as if they are not doing their job. Because what happens once you raise questions and write to SEBI and they are counter question, so they will say this person is actually harassing us, there is nothing, he's trying to say that we are not doing our own job properly. So I got
Sir,
a feedback.
but sir, you being at the senior level of serious fraud detection, can't you directly write to PMO or any other organization?
I've written, but nobody has a time to read or understand what the fraud is. See, the problem is that there are tax frauds also in that. And I met Director General of Income Tax, giving him a full details, 50-page details that how this fraud has been done. He could not understand, let me tell you. He said, "Acha jawab file kar do." 2.5, 5 years have gone back. Nothing has happened to that. So this is the status of India. It is an economy which is purely politically driven. If they want to crush a person with a political will, he will be crushed. All other complaints will remain on sidelines.
So I think that means that has something to do with the probity in public life by these big shots, and this is the dilemma which the auditors
See,
will
the
always
proxy
face.
firms roles, shareholders' right, these have to be enhanced. That if a shareholder raises a query, what the route has been adopted by SEBI is that some reply should be given to that query and file should be closed. Whether that reply is appropriate or not, nobody has an ability to read. So when I raised these questions, I got 57-page reply from the company to confuse enough a regulator. No regulator will read 57 pages, let me be sure. So companies are adopting those policies also to confuse regulators.
Right.
And regulators have no time and incentive. Their salary remains same. Either they are promoted scheduled caste employees. I'm using these words. These are very strong words. Please excuse me if that is the fact. But they don't want to read. And the person who is writing them to more, they think is a trouble creator. He's not a normal person. This is what an Institute of Chartered
There are
Accountants.
systems of whistleblower policy in organizations. So is it that
It
helping
is working only
out?
in select groups. It is, my experience is that Tata Group, I'm naming those groups, is very good. If you blow a whistle there, they actually go into the root cause and see it. But many other organizations, I have not seen it is working. It is only to cover up. They create some emails or documents it and just close the file. And the whistleblower is in dilemma, what I did. When a regulator asks what you did, sir, we have replied. 5 pages replies have gone out there. Regulator is also happy, 5 pages. Now regulator cannot read those 5 pages. As Rinka ma'am was telling, I was a trainer of MC officials. I was trainer of all registrar of companies. Only I can see in last 2-3 years now when entry of IRS officer into the registrars, the quality is little improving. Prior to that, it was very difficult to make them explain, what are their duties, how to write a notice to the company. They were not able to do so. But yes, last 2-3 years with the entry of professionals into the ROC and MCA, things are getting changed. And I'm hopeful that next 2-3 years it will go further well with educated people getting a chance, not the promoted people with no experience. And second is corruption. You go and talk to them and then say that what is my benefit in this? Why should I open this file? He has to work hard and he wants an incentive for that. It's a big
I think
problem.
this culture of red tapeism has changed its shape nowadays in this new age economy. But
It's
the,
getting
as
changed.
you are
I would
telling,
say,
the
I
age-old
will say,
practices
sir,
of corruption are still there.
corruption is rampant, and I
It has
tell you,
become
the
more organized,
biggest
so to speak.
corruption is taking place in accounting standard. The Ind AS, which has come, very few people understand in
Yeah.
India the new standard, and in the guise of this, people are committing fraudulent entry in the books of account because they know this is an area of confusion. Regulators have not read it, registrars have not read it. If anybody raises a question, we will give 30 pages of reply, and then file will be closed. See, even if you go to court, what will happen? Court will not understand
Nobody
accounting
has that
standard.
expertise to go deep into it.
See, CBI doesn't have expertise in accounting standard. ED has no expertise in accounting standard. Our MC officials are not expert in accounting standard. And especially big firms are doing now. If you want, I can send you all those letters. The amount of
No, sir,
pain which
definitely, I would like to be in touch with you in future also, because this is one of
No
my
problem.
key areas. Our Dr. Renuka and myself to have, we have written a
No.
book on fraud, financial frauds also. So
That's
we'll
great.
be
That's
glad
great.
to have those,
No,
like your
sir, great.
experiences
You will be
and
able to
your
do
reports.
research. If you read my emails only of last 6 months, you will be able to do a research and write up around 3,000 pages of books on frauds.
Okay. Okay, we can only hope that in the time to come, with the present government taking corrective actions in different
Government has very
fora or
little
different domains of
role.
industry.
See, government cannot go up to a balance sheet level. That is the problem of government. That
Yeah,
individual
that is the
officer who is
problem.
sitting, the individual officer who is sitting, he should be honest enough and diligent enough to understand. He doesn't understand. For instance, the Unitech Limited, the auditor had only 60 companies limit to sign because he had 3 partners. Each partner can sign 20 balance sheets. Okay, it is written in the Companies Act. He signed around 108 companies, listed companies, list companies. I complained in registrar, and registrar for 3 months said, "I'm not able to understand, sir. What is your email?" I have those emails in my record. So 106 accounts were illegal accounts in India, including Unitech, and for which 10,000 crore rupees worth of money is gone of the home buyers. I had raised it 5 years back. This company is given wrong financial statements and lying in public domain. It is written to SEBI. Now, nothing has been done. Now, see, I am not such a person with the luxury of time that I go and file writ in the Supreme Court against registrar and all those people. Though I have done forensic of many interesting companies like REO Limited, 10,000 crore rupees fraud, in which case I think ED has taken action. And auditors' properties have been now seized. They have attached the property of Ernst & Young's partners.
Okay.
So
Well, that is the challenge that as a torch bearer of anti-corruption, a person like you would always face, that you have to fight with an institution.
Fight,
But
my life
individual
sometimes is in danger. It can be in danger. Institute is doing a very devil's role, let me tell you. There should be representation. And that's why Nirmala Sitharaman, after reading IRU report, has taken an stance to open another institute for chartered accountants. When she came to know that chartered accountants are taking bribe and certifying financial statement, and that too of a company level like Ernst & Young. So they have thought of. I know this is all going on record, but it is backed by the paper, so don't worry.
So, sir, talking about this corruption and all, so I just like to know from you, because you are very well versed in all these fiascos that have happened. What about this the spectrum? What do you call the telecom spectrum scam that we kept on hearing at that time? 1.75 lakh crores worth of
that was
lost.
See, that was a perceived
Was
loss.
it a notional figure,
It
or
was a notional
actually
figure. It was a
can it be
notional figure.
transmitted?
See, it was a notional figure. And
So
the
actually, this kind of loss never happened. So what would have been
cash
the
flow,
actual
no,
magnitude of
actual
the
cash
fraud?
flow loss did not happen. But what was the problem of Congress government at that point of time to explain it? because they had allotted spectrum.
Yeah.
And the rules of auctions were not correctly followed. People will given chance to bid at a specific rate lower than what the auction would have faced. And they granted the license, although the money was not collected that time, but licenses were granted. But what Manmohan Singh ji later on said, that if I had cancelled those agreements, I had to pay the differences to the parties. The central government would have incurred a loss of an actual loss if the government had cancelled the agreements between the market rate and what is the allotted rate. So they used the route of Supreme Court to cancel that. So that nobody can write to Supreme Court for, difference and compensation. So that was his dilemma. So he kept quiet. It had happened in coal scam also the same thing, and in telecom also, that allotments were made at a cheaper rate than the perceived market rates. And the opposition then started crowding and they could not cancel it. That was the dilemma.
So rather than taking that executive route, they took the judiciary
route and they allowed it to come into the public. They were not brave enough to defend that we are doing it for lowering the tariff price so that it is a genuine thing. And it is a perceived loss. Let these licenses go up and we will increase the license fees as the subscriber base goes up. They could have taken that instance. But as there was no leader, they themselves got confused, worried, and they had taken bribe. So they had to refund the bribe money. That was one part. And second was that to compensate, there would have been enormous litigations if they had cancelled. So they adopted a safe route of Supreme Court. And some people earned brownie points out of it.
Okay. So thank you very much, sir, for your shared widespread knowledge and all. So
thank you for having me here, sir. Thank you. And I hope that students have learned something. I tried to be very crisp and thank you, sir. Thank you so much.
Yeah, I'd just like to invite Dr. Renuka now to please kindly take over.
Sir, we are also getting the question from the student. You have already discussed about the various cases, Satyam, Nirav Modi. In discussion, you have taken all these names. Whenever we are thinking from the point of view of the stakeholders, investors, outsiders, so these frauds are going from last many years, 4 years, 5 years, 10 years. And for example, we are taking Nirav Modi case. It has been identified in 14, 15, but this was going on from very long years. So as a stakeholder, as an outsider, how will people identify, because they want to invest their money, how will they stop all these things, providing the raw material, they will get back their money. The people are going to involve in the window dressing.
See,
so
I tell
how will
you,
they identify?
I have taken this matter with serious fraud investigation in India, and I have given them one full draft paper. And also to MC, it has gone through them. What I have suggested them, that you identify what should be your proactive roles. What now you are doing as a postmortem only. Fraud has happened, then you are going and beating the bush. What should be your preemptive roles? So I gave them examples of various CFOs who have done fraud in the past and still they are on the CFO of the bigger companies. So that trail should be established of fraudulent companies and fraudulent CFOs, even at the individual level, not at the company level. Like a person was in Aircel, I'm not naming him. Then he went to another company called Cairn India, and then he went to CG Power. And he went everywhere with his team, 3 or 4 persons gone together. And everywhere the fraud happened. What was that? Aircel is now in liquidation. CG Power has got facing 2,000 crore rupees of fraud. So I told them that this kind of people where you have found one person as involved, either involved or was associated with a company in fraud, there you identify and your name in your website should be coming in red. Whenever the red alert should be, you change the font of this person while reading. So any registrar, when he sees a CFO's name is in red, he will actually monitor that company closely so that it will act as a deterrent to the fraud. Likewise, any companies where you have received complaints from any shareholder, mark them in red.
Yes,
Don't be so
absolutely.
lenient. Even you do not punish, but keep in your radar. So that is how country can identify at least 1,000 people who are conducive to the fraud. And sometimes you take punitive action, 5 or 10% of them. So it will act as a big deterrent. And people are aware of this, that if I do one wrong, I will be caught. So right now there is nothing. Like Amrapali, I had a fortune of meeting
Yes,
the
sir.
person who is now behind bar. He was signing with both the hands. Are you aware, Renuka madam? He was having 4 DIN numbers. One right hand he will sign in English. So he's director in say XYZ name. Then the same hand he will use in writing in Hindi. So another director is generated with the same hand and DIN number is generated.
Okay.
Then he will sign from left hand in English and left hand in English. So he is having 4 directors' name, and his director himself is one individual with 4 handwritings. One Hindi English, one left hand, one right hand.
Kind
And
of
he was,
mystery, the mysterious minds. Yes.
but then there should be people who are able to read this. There should be
It
expert,
is too tough to detect.
too tough, but then we should hire expert, forensic
Absolutely, sir.
expert. See, now tools are available that who can read
Absolutely,
the
sir.
handwritings and all those things.
Absolutely.
So those are the things.
And two more points, sir. Sir,
Yeah.
one thing, in a theoretical mode, we are saying Binish model. Binish model is here. Either we are taking few of the ratios, because whenever we are thinking from the point of view of the researcher, they are taking the industries specifically which are involved in the fraud, and they are taking their ratios. For example, debt equity ratio, capital ratio, proprietor ratio, and they are putting them in a Binish model. Do you think, sir, these kinds of the models are capable to
No,
identify
no,
that these firms are
no.
involved in the kind of
These are
fraud?
good tools for an investor. These are tools for an investor whether to
Yes, sir.
invest it or not. Fraud is a total different mindset you require. It's a specialized area, and
Because
ratios can
I
only
think
help.
I also think
Ratio can only
absolutely yes, sir.
help you
Because
to
whenever
know.
they will take the amount they yes, sir, they will take the amount only from the publicized data.
Yeah, and those data are wrong. The data
Whatever
are
the
not
ratio
coming
they are
correctly.
taking. Yes.
So you can, like I told you in cash flow, if there
Yes,
is
sir.
no tax payment and there is a profit, you can understand there is a fraud, but you cannot be
Yes.
sure. So those are the
Yes.
MCA has prepared some data points to flag fraud companies based on those matters, and they are taking care. But it's very difficult for them also, because so much of training is required, so much of investment is required in tools and good people. So and as I
Yes.
told you, good people they don't like. If there are good people, because see, even in SFIU, let me tell you very honestly, a good SFIO will not exist in India,
Yes,
because
sir.
politically he will be thrown out. Nobody will,
Absolutely, sir.
because action will be taken only
Yes.
on those person where political will is there, and if that guy goes against that will, he will be eliminated. And by one such
Absolutely.
example, 200 good employees will get demotivated, and they will be not taking interest in digging further. So they will wait for ministerial orders.
Yes.
Do you know in India, SFIO is not independent. SFIO, if you
Absolutely right.
complain, they cannot take action unless an order comes from the ministry. And it is given in the Companies Act that
They
only
cannot take.
when
Yes.
MCA requests to conduct investigation, they will conduct. Otherwise, this law itself is wrong. Nobody is challenging this law.
Okay.
That means
Yes.
an
And sir,
independent.
sir, you are specifically saying the MCA, Ministry of Corporate Affairs. They are specifically pointed out the ILFS in the case of the Deloitte. They are involved in the fraud, but MCA also can point out the decision. The last decision will be given by the court.
Let me. This is I think offline we should take it. I'll tell you the more stories on that. There are certain stories.
Yes, sir. Actually,
because
it is
everything
very,
cannot go on
it is the
record.
topic.
I have some insight to
Absolutely
it.
right. Absolutely right.
Someday I will touch upon it. I know how it happened, how it was done. So
Topic was, yes, sir. Great. Do you think, sir, and whenever we are talking about the present scenario, we have changed a curriculum of the BCom student. I am talking in a reference of the student. Course curriculum. We have made a slight changes in the course curriculum. We have added the digital technology, computerized accounting, and artificial intelligence. We have added.
that's
Uh,
good.
Yes, sir. Specifically, we are talking about the blockchain technology, artificial intelligence, which is going to be added with the accounting. Do you think, sir, just like a Sarbanes and Oxley's Act have been changed, and now it is coming to India, in the accountancy with the help of software, blockchain technology is also going to be used. Just we are thinking that the crypto is not going to be hacked up till now. We can make the accounting more safer with the help of blockchain technology, sir.
Yes, it will help. The use of technology, but the only problem is that in India, masses will not be trained in technology.
Yes, sir.
It
Yes.
will be only 1% or 2% of the users will know it. 98% will be left out. So it will not be fair inclusion of all the people, and which will lead to frauds. But because the spread of technology is not there. So like MIT has done a good job. MIT,
Yes.
I regard Amita Chauhan ma'am a lot because
Yes, sir.
my son also was topper from MIT and he got rank in CA
Okay.
also. So she knows
Great, sir.
my son also. So MIT, that's why I accepted this immediately. Otherwise, I don't accept nowadays any program. So
Thank you, sir. We are very obliged to you, sir.
no, it's my
We are
pleasure.
very
My pleasure.
obliged.
Yeah. Thank you, ma'am. Thank you so much.
Thank you very much, sir. We
Yeah.
are very honored that you have taken our session, and
No,
we are very honored that I am moderating. I'm moderating your session. I'm very thankful to you. And most important thing, this session is very enlightening session. Students are getting a practical knowledge in reality. Our motto of conducting this workshop that the students are getting the practical exposure. And this lecture has proven that the students have learned the ratios, the analysis, what is the significance of it. And I think the students now getting the idea, all the ratios, all the things are interdependent, interconnected with each other. If anything is going to happen, first of all, this analysis is most important and vital. We are very thankful to you, sir. We are very
thank
thankful.
you.
Thank you
My
very
pleasure.
much.
Thank you so much. Thank you.
We are very thankful to our students also who have become the patient listener. Very thankful to my co-moderator, Dr. Swarichal Johari. Thankful to ask many questions, Dr. Harsh sir, and very, very thankful to IT department, logistics, Mr. Maksud for giving us that assistance. Thank you very much to all. Thank you very much.